We have a lot of folk investing in stocks. And I thought this 1999 clip was poignant because I remember, because I was in publishing at the time, when Amazon launched his website. And I said, ooh, it's going to be a problem. And this is before the Kindle. This is before the ebook, because they were doing something nasty that publishers could not, and Barnes and Noble and Borders at the time couldn't compete with. We would sell them the book at wholesale, right? The $20 book would sell it to them for $10, and they would put it up on their website for $9.99, losing a penny. Barnes and Noble would sell that same book for $25, making $15. But I was like, oh, that's nasty, because volume, just like in car dealerships, that is going to turn the tide and build habits. And I was not, and then when they started adding product, I was in the Kindle, lights out. What's the Amazon of today?
Well, there's a lot of industries being disrupted right now, especially because of COVID. I mean, one of them, especially that's a top stock that I've held for a while, is Teladoc, which is, especially even before COVID, I have a lot of friends that work in medicine, and they were already switching over more to, virtual hospital visits. Instead of having to go to see your doctor in person, and when I go to the doctor, I was like, I probably could have just done this over Zoom. So that was already unfolding, the telemedicine trend, but COVID just ramped that up. Now it's way expanding much faster than before. So I think that'll disrupt a lot of not only companies that own hospitals, but also traditional insurance companies who either choose not to adopt to use telemedicine technology, or simply don't have the wherewithal to use it yet. But I mean, Amazon is still disrupting as well, though. The e-commerce boom over the last year has really kicked into high gear. As like a young person, I buy basically everything online at this point, but only about 15 to 17% of retail sales in the US are done through e-commerce platforms. So I think that's going to expand.
Even during COVID?
Even during COVID, I think it hit, the mid 20s, but has since fallen back down. Which, I buy everything online, and most people I know do as well. But I think a lot of people who maybe didn't know how to use e-commerce platforms before COVID, and now we're forced to, now those customers, it's called being like a sticky customer, because now they realize how convenient it is, whether, that's ordering groceries or ordering, whatever it is, a water bottle off Amazon. It's much easier now, especially now that they've been forced to use these products.
I see on your TikTok, Etsy is something that you're excited about. Tell us why.
So I've actually, my latest video, I actually said that you should probably sell Etsy, because with their earnings, they were benefiting from mask sales. Because I mean, especially early on in COVID, if you remember, it was kind of hard to find a mask. So Etsy kind of filled the void there with these, independent Etsy stores on there. And it accounted for about, I want to say about 12% of their earnings at a certain point. But I was saying, I think that trend, Etsy long term, we'll see if there's, those sticky customers stick, who maybe came on to buy a mask initially. But now, it's already kind of priced into their stock. So I was actually taking profits on Etsy this last week. Okay. But that doesn't mean the e-commerce trend is stopping by any means. I think Etsy might just be a little ahead of its skis at this point.
There are a lot of tech companies that are taking a hit because things are, opening back up. I know Zoom and a few others, because we were doing everything online. And I think it's going to be like, people are going to lose their minds once I don't know if we're going to ever get to herd immunity, but once all of the states decide it doesn't matter how many people die, that's okay. Karen Hunter's still going to be wearing a mask forever, but y'all go ahead and act like it's still 1999 or 2019, knock yourselves out. But as a result, I think psychologically, all of the companies that were struggling, the airlines, the cruises, Disney's opening back up. Disney stock, actually, Disney did well because of Disney Plus, and and they were able to capitalize off of the streaming. What else can we be looking at if we were investing during this COVID time? That's probably we should get out, like Etsy.
Well, that's kind of, Disney's a great example of that. That's been a long-term holding for me. I actually bought them during the COVID crash, because at the time they generated about 30% of their sales just from theme parks, which obviously have been closed for about the last year. But they had incredible timing with the streaming platform, Disney Plus, because I think they launched it in November 2019. right before all this, all COVID kind of took off and locked down much of the global economy for, a significant period of time. So I still like Disney, especially with the parks opening up. But one industry I've been doing a lot of research on are the airlines, which for me, airlines were a terrible industry to invest in before COVID. The stock prices just went nowhere. They're not great businesses. But because of COVID, they had to restrict the amount of flights that they were taking because there just weren't that many people taking flights. But now I expect there's going to be some sort of a travel boom, but since there's a lower supply of flights available and more demand for flights, I think that's going to be really good for the prices of airline tickets, which will benefit the airline companies and their stock prices, at least temporarily.
You said you're young. We're talking with Robert Ross, the TikTok stock guy. You can follow him at Robert Ross _ on the Twitters, right? Robert Ross _
Robert E. Ross _ on Twitter. Yes.
Oh, right. There is an E there. I apologize. All right. How young are you?
I'm actually not that young. I'm 33.
Okay. All right. So you earned some of the gray in your beard.
Yeah.
When did you start investing and why?
So I took my first right out of college. I graduated in 2010, and it was just coming out of the financial crisis. So I was basically taking any job I could get, and I ended up landing an internship at Merrill Lynch in their wealth management department, and didn't love working in a big corporate culture. So after that, went to go work at a think tank where I was living in New Orleans at the time. Where I was doing a lot of writing on public policy. My background's in economics, not really in finance at that time. And, I liked it, but there wasn't a lot of room for growth. So, I kind of wanted to combine the research I was doing at Merrill Lynch and the writing I was doing at the think tank. And my professor at the time recommended me to an investment research company called Casey Research, where I worked for about 2.5 years as a junior analyst. And then when they started a sister company called Malden Economics, and they wanted someone to help build out their analyst team and lead their analyst team, they selected me to do that. And I've been there ever since.
And so your job is to look at the stocks and analyze when they're going to dip, when it may come back, when they may not ever come back. They brought up Sears in 1999 as being the stalwart, that stable stock. And then Steve Mnuchin got on the board. And anyway, I'm not going to get political with you, but Sears no more. What are you seeing when how did you know you had a gift? We talk about Berkshire Hathaway, Warren Buffett being this guy that's kind of like the soothsayer, but I think he's been doing this so long that these ebbs and flows are kind of like you can predict them if you've been watching it long enough.
To a certain extent, I think the style of investing that I promote is long-term investing. It's not, everybody kind of wants to be like a day trader and kind of, putting on like these big trades that they see on shows like Billions and the movies like The Big Short. But really, that's not how most, especially retail investors, really build wealth in the stock market over a long period of time. The way that you really do that is to buy and hold companies that are growing their earnings, usually large established companies, and you just hold them for, very long periods of time. Most of the money made in the stock market is by waiting and by having patience, not really by, day trading or anything like that. So I think what I try and do now on TikTok and have been doing at Malden Economics for a long time is kind of just explain what's happening in the stock market to retail investors. So, whether that's, recently we've had bond yields rising that are causing, technology stocks to kind of pull back. So kind of just explaining what's happening, but make sure people keep an eye on the long term and holding on to their stocks, because you don't want to get shaken out, especially at a time like this, where I think the market's going to be doing well for a while.
People have FOMO, and then they also are reactionary. This stock investing is not like I'm a dividend investor, and I'm investing for the long term, and I'm looking at dividends. So when I had Delta and then they stopped their dividend because they were doing really well, actually, of all the airlines, Delta had a great CEO and they were doing some really smart things. And they were, so I'm reading their earnings and and then COVID happened. And then I had the decision to make, because the stock plummeted. Do I unload? Do I think that we're going to be in this pandemic forever? Will they ever bring their dividends back? And these are questions that you have to ask yourself, right? Because the only reason why I invested in them is because they paid a healthy dividend and the company was healthy, and now they're not. So, how do you look at stocks like that?
I'm a big fan of dividend paying stocks. That's actually, I've run a service at Malden Economics, subscription service for about 5 years now. That's all I do is recommend dividend paying stocks. Because, it's a very safe way to approach investing. But kind of to your point, when there are big pullbacks like that, like we had in March, that's actually the best time to be buying on a historical standpoint. People always want to buy stocks, when they're doing really well, and typically when they're high. And it's counterintuitive, but really March 2020 of last year, that was the best time to be buying stocks. And it's also the scariest time to be doing it too,
Right.
because there's so much uncertainty. But it's an old quote in investing, it's buy when there's blood in the streets. It's a classic saying in investing. Easier said than done. But that's one thing I try and keep people, on the straight and narrow during times like that.